Welcome to Talk Tickers. Today, we are diving deep into nVent's absolute monster of a third quarter earnings report. The ticker, if you're following along, is NVT. All right, let's cut right to the chase. The first thing you need to see is how the market reacted. The stock shot up 9.6% on the day of the announcement. Now, that is a huge vote of confidence. It tells you right away that Wall Street absolutely loved what it saw. So what caused that massive pop? Well, it's the classic story investors live for, the beat and raise. nVent didn't just squeak by expectations, they completely smashed them. And then they turned around and told the market that the future looks even better. Now let's look at the hard numbers. Crossing that billion-dollar revenue mark for the first time is a huge milestone. But they didn't just crawl over the line, they blew past the consensus estimate by $38 million. And down on the bottom line, adjusted earnings per share came in at 91 cents, a really solid 3-cent beat. This is exactly what you want to see. It's a clean sweep, beating on both the top and bottom lines. And this right here, this is why the stock reacted so fiercely. Management took that Q3 strength and immediately raised their guidance for the whole year. They bumped up their organic sales growth forecast to a new range of 10 to 11%, and they raised their adjusted EPS target. The message is crystal clear. This isn't just a one-quarter fluke. They see this powerful momentum carrying through. So the big question is, how did they do it? How did they deliver their first ever billion-dollar quarter? Let's pop the hood and look at the engine behind these record numbers. Okay, so nVent's business is basically split into two main parts. You've got systems protection, which is the bigger piece of the pie at $716 million, and then electrical connections, which brought in a very healthy $338 million. But, the revenue split is really only half the story. The real story is in the growth. And here it is. Wow. This slide tells you almost everything you need to know. Look, electrical connections grew a very respectable 11% year over year. That's a strong number for any industrial business. But then you look at systems protection, up a staggering 50%. That's not just growth, that's an explosion. This is the hyper-growth engine that is completely reshaping the entire company. So what's lighting the fire under that 50% growth? Well, let's just hear it directly from CEO Beth Wozniak. Quote, "Organic orders were up approximately 65%, primarily driven by large orders for the AI data center buildout." There it is. It's not a mystery. It's a direct line connecting the AI boom straight to nVent's order book. And what's great is that these incredible sales are translating directly into cash. Free cash flow, which is a really key measure of a company's financial health, grew an incredible 77% year over year. This shows they aren't just growing for the sake of growing, they're growing profitably. They're basically printing cash, which gives them all the fuel they need to reinvest in these high-growth areas like data center cooling. Okay, let's zoom out a little and connect the dots. A quarter like this doesn't just happen by accident, right? It's the payoff from a very deliberate, multi-year strategic pivot. They've been positioning themselves perfectly to ride two of the biggest waves in the economy, AI and electrification. Now, what's so cool about this is you can see their playbook laid out for everyone. Step 1, focus the business on higher growth electrical stuff. Step 2, target these massive long-term trends like AI. 3, invest aggressively in capacity and new products for data centers. And step 4, execute. And boy, did they ever execute. This quarter is the ultimate proof that the strategy isn't just working, it's accelerating. And get this, they aren't just playing in the AI sandbox. They are aiming to dominate the critical infrastructure that actually makes AI possible. See, AI chips generate a mind-boggling amount of heat, way too much for old-school air cooling. nVent provides the liquid cooling solution that's essential. They've already deployed over a gigawatt of it. And crucially, they've been named a solution advisor in NVIDIA's partner network. That's a massive stamp of approval. To keep up with demand, they're literally doubling their manufacturing footprint. With a record order book giving them a clear line of sight all the way out to 2026 and beyond, they are cementing themselves as leaders in this space. Okay, so that's the breakdown of the quarter. Now for our favorite part, the next call. We've gone through the data, we've listened to management, so here's our take on what happens next. Because really, the only question that matters for investors now is, what's the trade? How do we position ourselves for the next earnings report? Here is our prediction for Q4. Management has guided for really strong organic growth of 15 to 17%. Our take? We think they'll hit the high end of that range, maybe even a little more. The order strength and their massive backlog give them a clear runway. For adjusted EPS, they're guiding to 87 to 89 cents. We're calling for a beat. We think the number comes in above 90 cents, driven by that strong volume and good pricing. So what's our final verdict? You put it all together: the accelerating AI-driven demand, the flawless execution, and our own expectation for yet another beat and raise quarter, and our rating on nVent is a confident outperform. And as always, please remember this analysis is for informational purposes only. This is not financial advice.